Starting this year, if you receive $600 or more from a payment processing app, a Venmo, something like that, you might get a new tax form, a 1099-K. What is that about? What do you need to know? What do you need to do with it? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so we've all heard the rumors. We've talked about 1099-Ks before on the Wise Money Show channel. Make sure you hit that subscribe button. But you've been hearing this rumor about, well, I'm going to have to report all my Venmo transactions, or the government's going to be able to look at my bank account if I have transactions more than $600. And a lot of that stuff is rumor. But there is a big change with the filing, or the filing of Form 1099-K that takes effect this year, 2022. It's going to impact almost all of us, but not entirely to the degree that many of us think. So this is brand new. I'm going to explain the change and then help you know what you need to do with it and whether it will apply to you directly, indirectly, or not at all. So here's the big change, and the IRS even issued a memo kind of communicating, hey, as a reminder, this is one of the big changes for this year. Did that right before Thanksgiving, but it also surrounds the 1099-K, and there were some changes to when a 1099-K needed to be issued, and those changes were enacted inside one of the stimulus plans, the American Rescue Plan Act, and it was to take effect starting in 2022. So the 1099-K, it's like a 1099 that you would receive for anything else, where you're going to get a copy and the IRS is going to get a copy. So therefore, you've got to report it on your tax return. These aren't new forms, but they previously, before this year, before this law change, were only required for individuals that had transactions through credit card processors, PayPal, Venmo, that sort of thing, that totaled more than $20,000 and were more than 200 total transactions. And so really, that excluded almost all individuals. And really, it was just for businesses. And businesses, well, you need to report all of that income anyway, whether your total gross payments or receipts were $20,000 or more, or your transactions were 200 or more or not. You need to report it, because if it was business income, you didn't need a tax form to file. You just needed to report that income. You're required to do that. And so those were the old rules for issuing 1099-Ks. Starting 2022, 1/1 of 2022, and this is what has created all the upheaval and the concern, is they've reduced that limit. Now, instead of $200,000 total, it's $600 total. And there is no minimum number of transactions. It could just be one transaction. If that one transaction is 600 or more, you might get a 1099-K. Okay, so let's go through some of the application then. Does this mean if you're using Venmo, that's the one I use, or Cash App or something for person-to-person payments, friends and family, you're not buying something, you're not selling something, you're just, you're splitting the cost of the pizza, or the one that we all have these transactions every single day. We were buying a Christmas gift for a friend, and hey, why don't you put $10 in it? We're all gonna, thank this person for whatever. And so, yeah, you just did that. We're all doing that. Will you get a 1099-K for those? You shouldn't. And I wish I could say no without the shadow of a doubt, but you shouldn't, okay? You shouldn't. If your Venmo account, check out this FAQ, if your Venmo account is set up where it's just friends and family, then they're saying they're not going to issue a 1099-K, because that's not the point of this. The point of changing these rules for 1099-K is those of you that are putting yourself out there selling goods and services, this is going to trigger a tax form more readily, more frequently than the previous rules. It does not mean that if you're doing peer-to-peer payments for friends and family, that's, for something other than a good and a service, that now you've got to report that on your tax return. That shouldn't happen, okay? So if your Venmo account is set up where it's just, friends and family, then you shouldn't get a 1099-K. I know some of these other apps, that's the one I'm familiar with, Venmo. I'm no expert in Cash App and some of these others, but some of the others, you actually need to state, nope, this was friends and family or peer-to-peer, and this one was for business. In my opinion, you got to keep those separate. And you're going to see this year, it's going to be a mess. If you did both, it's going to be very, very messy reporting this on your tax return. But if you're just using a payment processing system for peer-to-peer, it's not for goods and services, you should not get a 1099-K. If you receive one though, the IRS is receiving one as well. And that means you're going to need to report it on your tax return and then just work with your CPA, your tax preparer, to say, no, these were all, none of these were for goods and services. And you'll just, I'm not exactly sure how the reporting and what form you're going to need to like how you'll have to fill out that form. We'll definitely do a video on that once that comes out and all that. But you shouldn't have to report that as income. But if you do receive a 1099-K reporting payments for friends and family, you're going to need to put it on your return, but then state that none of this is actually business income for goods and services. Okay, then what if you use Venmo or PayPal or one of these other apps for your business? Nothing's really changing. You still need to report that income on your tax return, just like you did during the old rules. It's just in the old rules, there was a really high threshold for, before which you would receive a 1099-K. Now they've lowered that threshold, so it's more likely that you're going to get a 1099-K, but you still need to report all the income. Nothing changes. Nothing changes for you, because if you were using one of these apps for your business, you should have been reporting the income all along. For example, the little stand, we're in the holiday season, but the little stand right outside my neighborhood where they sell pumpkins and all that stuff. Our family's been going there for a few years. Every time we go to check out, they use Venmo. All right, so pay in Venmo, blah, blah, blah. So what I paid for pumpkins was far less than $600, but I'm sure that in aggregate, this little stand does well more than $600 for the year. They should be reporting all of that income, period. All of it. This year, they'll finally, their Venmo will get a 1099, but they'll need to report it. But they should have reported it all along. So really no change there. So then the final category are those of you in between. Well, I'm using one of these payment apps, or I've used it from time to time, not for a business, but it's not for friends and family. And you might say, well, what else is there? It's for, hey, I had tickets to this concert. I didn't want them anymore, so I sold them. I have old furniture that I needed to sell, that I wanted to sell. I posted something on Facebook Marketplace, something like that. Now that's a little unclear. That's technically you selling a good, but so it likely will trigger a 1099-K. But does it mean it's taxable? Well, it would mean you would need to report it on your tax return, but if there wasn't a gain, then you simply need to say, listen, I bought those Notre Dame tickets for this, I sold them for this, there's no gain, therefore there's no tax. But you will need to report it on your tax return, okay? Because you're going to get a 1099-K for it. If you sold some used furniture or something like that, you sold it for this, but you bought it for this, well, that's now a loss, technically. I don't believe you're going to be able to claim that loss on your tax return, though, because technically, even though you bought that furniture for up here and you sold it for this, you've been using it. So what's the true value of it? I don't know. I don't believe that you'll be able to take a loss for that. But then, of course, it's the IRS. So what if you sold the antique for this or whatever, but you actually bought it for this? You're going to need to report that gain, even if you're not in a business, because you sold a good or service for something greater than what you paid for it. Those details you're going to want to work with your CPA on, okay? I think the individuals where you're just doing peer-to-peer, you shouldn't receive a 1099-K. This should be very easy for you. If it's peer-to-peer and you actually do receive a 1099-K, I think that also will be clear. Don't ignore it. You're going to need to report it on your return, but you're going to need to state on your return, nope, this was for peer-to-peer. It wasn't for a business or goods and services, okay? So that one should be easy. If you're a business, you'll likely now get a 1099-K where maybe in the past you didn't, but it's also easy for you. You've just got to report this as income like you always have. I think the confusing part are those of us in between that maybe use a service like Venmo or something like that for a side hustle or for selling a concert tickets, sporting events, some used furniture, or maybe a garage sale, something like that. And that you're going to want to work. Hopefully that those guardrails help, but you're going to want to work with your CPA this year. I think a lot of us are going to land in that category. I think CPAs are going to be busier. We already do have a shortage of CPAs nationally, of course. And so I think there's going to be more complexity on your tax return for this year. But as I always say, this is why you need a certified financial planner on your team, and that certified financial planner needs to be collaborating with your CPA. I do think a lot of tax preparers, even if they're not CPAs, are going to be confused by this as well. And it's very possible you're going to just turn in your documents, or you're going to go through TurboTax and fill out, yep, I got this tax form, blah, blah, blah. And instead of, offsetting and saying, yeah, but it wasn't for a good or service or something like that, instead of filling out the rest of the schedule stating, no, this isn't taxable income, it might land on your tax return and you're going to have to pay taxes that you otherwise shouldn't pay. All right, so that's a high level of what the 1099-K is, how the rules have changed, and how it might apply to you. Guys, this is brand new. These rules just changed. We'll certainly be communicating more and giving more updates here on this channel, so make sure you hit that subscribe button. But work with your CPA. Work with your CPA as you have questions when it comes time to file your return, and make sure that you are reporting all the right income, reporting any expenses or offsets to it to make sure that there isn't income that lands on your tax return that shouldn't. Work with your CPA on that. If you don't have a CPA on your team or CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go on and take your next wise step in your financial life.